everyone. So, all of us have too much going on in our life and in our mind, and we always say to talk it out in order to feel light and to feel better.
Jumping Mind is one of its kind mental health tech startup.
A safe place to connect with friends and talk about real life challenges.
To spread 1 billion smiles and create one happy world. That's what we aim for. We are Jumping Minds.
We are Jumping Minds.
So, download Jumping Minds app today and feel better instantly through personalized smart solutions.
joining in. We're super excited to have you.
It's our pleasure.
Yeah, likewise, Tanya. This is probably first session I would be doing anything with the BHU, so I'm quite excited as well.
Right, so we're really excited to have you as well. So we'll just do a quick mic check, see if everything's working fine on the tech team, and we'll begin with the session.
Okay.
Divyansh, can you confirm if everybody is audible and the stream is working fine?
Yeah, everything is fine.
Okay, so we can begin, right? Great, so we'll begin with the session. Hello everyone, and welcome to this very intriguing panel discussion themed Metrics VCs Invest In as part of E-Summit 2022 IIT BHU. The Entrepreneurship Summit, with the motive of molding fresh entrepreneurs into monarchs of their domains, embraces various workshops, competitions, sessions, and many more refreshing events that come along with the possibility of assessing and incubating the participants, which truly aids to boost the entrepreneurship culture in the nation. This conclave becomes a perfect platform for collaboration among the student community, venture capitalists, and passionate people about entrepreneurship. This year's E-Summit is themed as Ventures of Veracity, which is an inspiration for all the entrepreneurs to strive on untrodden paths in the pursuit of excellence. Today, for the panel discussion on Metrics VCs Invest In, we have, first up, Mr. Gaurav Ranjan. Gaurav sir is the Vice President of Prime Ventures Partners and holds an MBA from IIM Calcutta. Hello, sir. Thank you for joining in.
My pleasure.
Next up, we have Mr. Saurabh Lahoti. Saurabh sir is the Managing Partner at Pentathlon Ventures and an IIT BHU alumnus and holds an MBA from the Ohio State University Fisher College of Business. Thank you so much, Saurabh sir, for joining in.
Thanks everyone. Thanks, Tanya.
So to begin the session with, I wanted to ask, starting with Gaurav sir, if you could just brief us about your career trajectory. How did you venture into the VC space? What was the journey like?
Great. So thanks again, Tanya, for having me here. Love to share whatever I've learned over the last 8-10 years. So a little bit about my journey. So I've been with Prime for close to 4 years now, doing early stage investments. So I'll start from my journey. So I did my undergrad in computer science from Birla Institute of Technology, Mishra. After that, I did work for 3 years, mostly in technology domain with companies like Nomura and Dell. And after that, I decided to take a change in my career and then went for my MBA from Calcutta. Post MBA, I was quite inclined to get into startups, into entrepreneurship. And the thought process was quite organic, maybe a little bit to do with the company that I was in during my MBA and my friends there. So after that, I joined an early stage startup called Zorooms or Zostel. The founder of Zostel again happens to be a BHU alumni. He was a good friend of mine. So I joined them right after college, part of the founding team there, worked there for close to 2 years. We did Zostel, we set up Zorooms, we raised venture funding. And then post Zostel, when Zorooms got acquired by Oyo, then I moved to another startup. It was called HouseJoy, which is into on-demand home services, marketplace for on-demand home services, very similar to what Urban Company is. And we were like very close competitors back then in 2016-17. Then again, we had raised venture funding from the likes of Matrix and Amazon. So I was there again for close to 2 years. And after that, I decided to move out of HouseJoy. But one thing was sure, that I wanted to remain in the startup ecosystem, whether as an entrepreneur or as an operator. VC was never on my mind. So the move into VC was all by luck and serendipity. So my CEO at HouseJoy happened to be a very good friend with Amit Somani, who was a partner at Prime and also a BHU alumni. So they were looking to hire somebody in the investment team. And that's how I got connected to Amit. I met him. I liked the team. And I thought this is also a good place in the startup ecosystem. This was a good place to be. Get to see different business models, different sectors, meet really smart, interesting people, entrepreneurs, etc. And that's how I got into VC. And for the last 4 years, I've enjoyed the role and continue to do early stage investments.
Right. That's an extremely interesting journey, how you started off as an engineer and, finally ended up into this VC space. The same question to you, Saurabh sir. What was your career trajectory like? How did you end up in this VC space?
Yeah. So I graduated from BHU in 2003. Initially I kind of worked with Infosys. I remember there was a joke during at least those days that Infosys used to come in a big bus and used to hire truckload of people. And those were the times where Infosys was kind of mass recruiting. I think there was 2002 and 2003 was tough times because of some kind of meltdown that happened during those times. But I joined Infosys. I worked with them for almost 3-4 years. Big chunk of my time I was actually based out of their US office, working with their banking clients. But went for my MBA, did my master's, and since then I've been kind of in investment space. Initially in a corporate M&A setup, helped a Fortune 500 company did some JVs and acquisitions in India. But then I transitioned myself to this kind of early stage investing ecosystem. I've been associated with few investment funds, but had this opportunity to start and co-found this fund called Pentathlon Ventures. And that is how kind of our journey started. I, along with a couple of other partners, started this fund. I come with an investment background, but my other partners are largely entrepreneurs who had good exit in the past through their own kind of software and IT businesses. And we were kind of heavily focused towards investing in SaaS, B2B SaaS, software as a service as an area. And in last 2 years, we have invested in kind of 20 odd companies. So that is something I'm thoroughly enjoying, being part of this ecosystem, working with very early stage startups and entrepreneurs. Yeah, so that's a bit on myself.
Right, that's an extremely inspiring journey right there. Like you mentioned that you're primarily focused on B2B SaaS startups and early stage investments. I'd also like to ask Gaurav sir, what sector do you typically invest in and what stages of startups are there usually?
We do invest in early stage. When I say early stage, it's at seed to Series A. In terms of sectors, we are primarily a tech investors. We invest in tech product companies, and we are sector agnostic. So we have investments in SaaS, in fintech, in logistics, healthcare, education, gaming, and so on. We are a little biased towards B2B or B2B2C model. So of the 45 companies that we have in the portfolio, about 80% would be in B2B or B2B2C kind of model, and the remaining 20% would be in B2C. But we are sector agnostic fund, as I said. Couple of areas that we don't invest in is offline businesses or operationally heavy businesses. For instance, any direct-to-consumer brand or an offline retail setup. Those businesses we haven't invested in.
Right. So, Saurabh sir, are there any other sectors apart from B2B SaaS that you guys invest in or you're looking forward to invest in?
Yeah, I think we are very much B2B SaaS focused fund, but within B2B SaaS we are investing across different horizontals and verticals. For example, healthcare, education, logistics as verticals, but horizontals like HR, travel. Obviously it got impacted badly in last 2 years. But we are seeing some early signs of very good recovery. Travel, sales and marketing as a functions, but SaaS is something that cut across all our portfolio companies.
Right, sir. So basically, when we look at pre-revenue stage startups, so startups which are like at a very early stage, starting with Saurabh sir, what are the typical metrics or the North Star metrics that you look for while investing in such companies?
Yeah. So when you talk about kind of a pre-revenue company or a pre-product company, because there are hardly any metrics in place in terms of performance-oriented metrics. What we do is that we actually start with the team. That we say, okay, is this team right to execute on this business plan? Do they have the right kind of breadth and depth to execute on this? And do they have the right background that inspires confidence that they would be able to kind of take this venture forward? So that is something that we heavily focus on. One of the important thing is also we look at the breadth of the founder team. That do we have people coming from technology background? Do we have people coming from sales background who really understand the customers in the segment, right? So both technology and customer centricity kind of becomes very, very important. The second piece is that what problem they are solving. Is this a problem which is good to have, or is it a problem must have, which would kind of nudge the customer to take decision faster because it's a burning problem for them, right? If it's a good to have problem and customers really don't care about it, then they will keep on delaying the decision making around it, right? Which ultimately impacts the sales cycles, the acquisition costs of customers, and so on and so forth. So that is one thing. I think on the problem, and probably the third is what I would call is the size of the market. Right? There are people who come up with a very, very narrow problem statements. They say that they are solving a very unique problem, but then we'll like to see that can this problem statement could potentially be expanded into kind of adjacent problem statements and could allow company to expand the TAM, right? So we look at that. Then I think the other thing which we would probably focus on is that if the companies, if the markets are big enough, we also look at the competitive landscape. That how are they entering in this space in the right time, and do they have the possibility of becoming number one or number two in this space as they get into the market? So I think these are things that we focus on for a very early stage companies. These are more team market oriented aspects rather than some performance metrics because they are just not there.
Right. That makes sense. I mean, you covered a lot of points in your session, like from the team, the customers, the problem. That really makes sense. So, Gaurav, a similar question with a tweak. Like, do you also investing at ideation stage at companies who are not really producing revenue and still building the MVP? Do you prefer investing in them, and what are the metrics that you look at?
So in our case, we come in a little later, right? Mm-hmm. So we do invest. I mean, in some cases, we have done investments which are pre-product, pre-revenue. But I'll tell you, those are cases where either we have a very strong thesis or point of view about that problem statement or that sector. And hence, we are willing to invest even at a pre-product, pre-revenue stage. The second case, which Saurabh also touched upon a little bit, was the other case where we invested, where the team market fit is very strong, where we believe that this team is the right team to solve this problem statement in this market, right? In those cases, we do pre-product, pre-revenue investments, but those are far and few. Mostly when we come in, the company has a little bit of traction, may have some early paying customers or early customers who are engaging with the product, should have a product definitely when we come in, right? So the metrics will differ a little bit. At our stage, we look for some early validation, right? Of the product that you're building, of the propensity of the customer to pay or engage with the product. Whereas at a pre-product stage, the validation you look for is more on the team and the market. At our stage, we do look for some validation on the execution side as well, where has the team executed something? Are we seeing some movement, either in terms of revenue, either in terms of product, and so on, right? So metrics will differ a little bit at pre-product versus when we come in.
Right. So as you talked about traction, so what kind of traction are VCs looking for? Is there a hard stop, a benchmark of what kind of traction it is, and how different is it in different sectors? Maybe Gaurav.
So see, at startups, right, one of the most important metric that matters is growth, right? And growth may not necessarily be always revenue growth, right? So when we look at companies, instead of looking at absolute numbers, whether you are at, say, X MRR or ARR, or you have X number of customers, we look for what has been the trajectory in the last 3, 6, 9 months. Has the company grown at, say, 10, 15, 20, 30% month on month? either in terms of revenue, either in terms of acquiring new customers. If you are building a B2C, say gaming app, are you seeing good retention? Has the retention improved? So rather than looking at absolute numbers, we look for trends, right? So if it is the retention should be improving month over month. If it is engagement on the product, the engagement should be increasing month over month. In, say, a SaaS product, right, your sales cycle should decrease month over month. Retention should be better there, right, and so on, right? So if I have to look at metrics that matter at the stage that we come in, again, it depends on the business model and the exact stage. But of course, growth metrics, whatever defines the growth metrics, be it revenue, be it number of users, be it engagement on the product, that'll depend on the business model, right? For instance, if it is a SaaS company, we'd want to see month-on-month growth in the number of new customers acquired. At the same time, we want to see the churn is stabilizing with the older cohort. We're seeing that the customer is using or the engagement on the product is much higher, right? If you're building a B2C marketplace, for instance, you'd want to see that both the seller side is able to monetize, they're seeing liquidity on the platform. On the buyer side, you should see transactions happening month over month or week over week. Again, that'll depend on the category of the product. If you're building a daily commerce product, you should see weekly transactions. If you're building a proper e-commerce product, you should see monthly transactions and so on, right? If you're building, say, home services like what HouseJoy was, maybe you would see a quarterly transaction, repeat frequency and so on, right? So those are the metrics that we look at: growth, retention, engagement. These are like top three metrics. And again, more than the absolute numbers, we look for the trends. Is it improving? Has it improved over the last 6 to 9 months?
Right. That makes sense. Saurabh, so what is your take on that? Do you also, look at the trends, or do you have a benchmark for, say, traction or gross margins, or what is your take on that?
Yeah. So I think Gaurav covered it quite well, and I completely agree with him, the points that he mentioned. I think one of the interesting things that we hear from a lot of founders is that they come back by saying that, hey, VCs are
I think
there's some network issue.
Hi guys, sorry, I had a power outage. I shifted to my hotspot. You guys can hear me, right?
Yes, sir, clearly. No worries at all.
Yeah. I was just, I don't know how much you guys were able to capture, but I was just saying that a little bit in jest that that there is a typical tendency, or at least a complaint from founders that, hey, VCs ask for this. They'll end up concluding the discussion that, hey, give us more traction, show us more traction, kind of thing. And I think it boils down to what stage of VCs that you are approaching with. If you are at a very early stage, maybe at a pre-seed stage, and if you're going to an investor who slightly invests at a mature stage, they might be looking for that. At the same time, what also happens is that you might go to a VC who and you as a founder at a stage where you have a revenue, and still VCs ask for traction. I think it is an indication of what Gaurav probably pointed out. See, revenue is good, but what matters to VC is the momentum of that revenue, right? And that's a very important aspect, right? You might be a company which have generated, let's say, 1 crore of revenue over a period of 3 years. That may not be very exciting for VCs. But if you have generated that same revenue over a period of last 6 months, is what would excite VCs. Because underlying, it shows two aspects. One is it shows that you are able to deliver execution. You guys are able to drive growth, and you are able to hustle and hack growth. That is one. The second important thing is it shows that you have a very strong product market fit. And you are when you go to the customers take decision faster in terms of bringing you on board. So growth is actually kind of decide on onboarding you as a portfolio companies, because growth in some sense kind of addresses most of the questions around team capabilities on the market side of things, on the product market fit. So if you can display growth, I think there cannot be a better metrics than when it comes to traction, right? And I think second layer to growth would be the retention and the churn aspect, right? You could be a business which could be growth rate month-over-month basis, but if you have a leaky bucket, when I say leaky bucket, what it means is that you are adding customers on top, but you are also losing customers very, very fast, which is an indication that hey, your sales engine is working, you are able to bring customers on board, but customers are actually not valuing the product. They start you made a very good sales pitch to the customers, they onboarded you, but they realized that they are not able to get the value that they were seeking, and very few months they stop kind of. So after growth, I would like to focus on the retention, the churn aspects of the business, because that is an indication that are you delivering value, and it is and for that I would like to see how customers are engaged with the product, not just customers are buying onto the product, but how customers are engaged with the product, right? So I think for me, bottom line when it comes to traction would be the growth and the retention part of it.
Right. So I think so there are a lot of like jargon terms in the market right now, like CAC, LTV, NPS, and all these words like really drive the early stage founders, and they're really worried about it. Starting with Gaurav sir, what is your take on these metrics? How important is CAC, LTV, or NPS while you're looking for investing into these firms?
Mm-hmm. Got it. So see, you need to understand what are metrics, right? Metrics are basically a quantitative way of looking at the health of your business, right? And hence it becomes important what metrics you track, right? So CAC, LTV, of course, are important because that is the core revenue driver. LTV is the core revenue driver and CAC is the core cost driver, right? So of course, for you to build a sustainable and a good business, a long-term sustainable business, you need to make sure that your LTV is always 3x the 4x of your CAC, right? So that if you acquire a user at say X amount, you are paying X rupees to acquire a user. In the lifetime of that user, you're able to monetize 4x, right? That is only when you'll make a sustainable business, because you also have to cover the other costs, which is your team cost, your tech cost, product cost, etc., and the 3x that you are making here on that customer, right? Hence, CAC and LTV become very important. Now, at early stage, again, when founders are building at early stage, you do a bunch of experiments. In some cases, CAC will be high. In some cases, CAC will be low, right? But it's also important to understand when you're looking at your CAC, for instance, it is important to understand the CAC for different channels that you are acquiring customers via, whether it's digital, offline, wherever you can attribute CAC to the customer. It is always good to do that at a channel level. That is one. Second, it's also important to do at a cohort level, right? Because your CAC may keep coming over a period of time because, for instance, your product gets word of mouth publicity, right? And hence people are coming organically to your product. Or the category itself is expanding. There are more players entering into that space, and hence people start looking for products in that category, and hence your CAC keeps coming down. So it's important to look at CAC at a cohort level, similarly LTV at a cohort level, so you're able to identify what changes did I do in the product or in my go-to-market or in my marketing strategy, which is driving the CAC up or down. Mm-hmm. And similarly, the LTV of that cohort up or down, right? So it is actually very important to look at CAC and LTV. But at early stage, again, as I said, things evolve a period of time. So you need not fret too much over optimizing CAC. You just need to figure out where customers are coming from, right? As I said, CAC is important, but at very early stage, things will change as you grow, right? So it is not very, you need not fret too much over optimizing your CAC. That is my point of view, right? But again, it should not be out of whack where if the lifetime value of that product that you see is say 100 rupees, and your CAC is 1,000, that is again unsustainable. But if your lifetime value is 100 and CAC is 80, over a period of time, you can reduce the CAC, increase the LTV, right? But if it is a difference of 10x, it will be difficult to do that, right? So it should be within reasonable limits. But again, at early stage, things will change as you scale. So, but it's important. Both CAC and LTV are important. And there are certain metrics which are, again, lagging metrics, certain which are leading metrics, right? So NPS, we look at it as a leading metric. If your NPS is coming down, which means your customers will churn out at a later stage. You'll not get more referrals, you'll not get more organic customers. And hence NPS also becomes very important to track. Again, different metrics, I can talk about it later. At different stages, different metrics make more sense. Again, also depending on the type of business model that you're operating with, right? But again, CAC, LTV, NPS are all very important. Depending on the stage of the company, one will be more important than the other.
Right. That makes sense. So similar question to Saurabh sir, along with a small tweak, you haven't come across, founders using their own metrics, inventing their own metrics, and sometimes, tweaking those metrics, like talking about retention, they'll just tweak it into some aspect that we're getting more retention from, say, customers coming from Facebook or something like that. So how significant are those metrics when you're considering them for investment?
Yeah. I mean, maybe let me take a step back, Tanya, and ask you this, that just for kind of mine and Gaurav's kind of knowledge, the larger chunk of the audience here is students or kind of aspiring founders or founders who are kind of just starting with their kind of journey towards being a founder. Is that true, or do you have a kind of different base of audience here as well?
So we basically have we're live streaming this discussion on YouTube, and we are expecting a mix of an audience, aspiring entrepreneurs, early stage entrepreneurs. So that's the kind of crowd we're looking.
Got it. Okay, great. That's very helpful. No, you are right. I think it's not a good idea to start kind of inventing the metrics like you have said. I think there has to be industry standard metrics that should be used. If you are, let's say, a B2C company, you should use the metrics that are relevant for a B2C company. If you are a SaaS company, then there are standard metrics around MRR, ARR, LTV, CAC, sales payback period, and so on and so forth. Because we focus on B2B SaaS, I can expand on metrics that are relevant for SaaS as a business. Gaurav talked about kind of platform plays like B2B commerce or where you have two sides of user base. Then you have a different kind of metrics. So it's always a good idea to actually use the metrics that are specific to the industry that you are in. How it helps is that one is that for an investor to actually relate with that becomes easier, right? That is one thing. Now, when you said that, hey, can people kind of come up with their own metrics? I think one, as I said, always prefer to use some industry specific. I'm not sure if it helps to actually kind of narrow down your metrics or invent your metrics, because it actually creates a trust deficit in the sense in investors' mind that it by default implies that you are not willing to talk about your key metrics because that is likely going to be not very impressive, right? So it actually by default kind of creates that impression that metrics is the core metrics may not be very impressive. So it's a good idea to actually state that the way it is, right? And show that how that metrics is going to improve over a period of time, right? So I think in a nutshell, I would say not to do so. Just focus on the core metrics that are acceptable as an industry and go for it.
Right. So I think a note for all the aspiring entrepreneurs would be to, largely stick to the industry specific metrics that are there, the standard ones.
Yeah, and I think just one point, because I think there was this discussion on the derived metrics like LTV and all. I think particularly for early stage founders, I would say that things like LTV are something that I generally discourage to use, because what does LTV means is that it talks about the long-term value of the customer, and in reality you don't know the long-term value of the customer, because the customer actually hasn't stayed with you for 2-3 years to say that, hey, my customer is going to stay with me 3 years, and for that my customer is that, right? And what it means is that long-term value is just the guesstimate of what that value would look like. I think use some